Welcome back, investors, to Ticker Time News. I'm Adam. Thank you for joining me for the After Hour show. We've got a bunch to talk about like we do every day the market is open. So remember, though, the most important thing is what's on your mind. If you have a question, leave the ticker symbol and your question in the comments, and we will go over it live during the show. So while we are here today, the market seems to have rebounded and bounced, but the question is, can we trust it? Can we trust that this rebound will hold and the market will continue moving up and to the right? I'm not so sure, but hey, it's a green day, so let's celebrate that. Now, before we get into the individual stocks, let me give you my brief overview of the market today. So stocks did rebound and they gained steam this afternoon. It seemed like this morning things were a little bit red, especially on certain stocks and indices and industries. But as the day went on, the rebound seemed to get a bit hotter and bounce a little higher. So trading this afternoon was definitely much better than it was this morning after a sharp sell-off last week. Investors, I believe, kept betting on a strong economic recovery, while equities benefited from an improvement in sentiment amid reports showing that the new variant may be causing milder illnesses or maybe not as bad as some feared for the new variant than previously thought, which is obviously a good thing, really good thing. Now, the Dow did jump more than 700 points today. That was really nice. The S&P 500, it rose 1.5%, and it reclaimed its 50-day moving average, which is obviously a very important area for the S&P 500. Here it is on the chart showing you that it has closed up above its 50-day moving average, and it bounced right on that 50-day moving average. That's the last candle that you see there. The 50-day moving average is that blue line that goes running into the candles here. Now, the Nasdaq, it traded 1% higher, so it didn't rebound quite as quickly as others, although it did start what seems to be in a deeper position than the Dow or the S&P 500. Now, all 11 sectors did end the day in positive territory, while 9 groups gained at least 1% or more. The energy sector was up 1.5%, and it finished near the top of the leaderboard, thanks to a day-long rally in crude oil. The rebound in crude did not get in the way of a rally in airline stocks, though, as they extended their bounce off last week's lows on a receding probability of additional travel restrictions. United Airlines was up 8.3%, American Airlines 7.9%, and Delta Airlines, well, they were up 6%. And they were the top performers in the industrial sector. So that's a quick little rebound of the market. But of course, we do have to check in on cryptocurrency. As we know, Bitcoin took a pretty steep dive on Saturday, Friday night into Saturday. BTC USD on the chart on TradingView. There is a link in the description below for a free account. Now, in yesterday's Catalyst Watch video, I talked about a certain mentality, a certain line in the sand, if you will, for Bitcoin, and that was $50,000. With Bitcoin below $50,000, that was a big psychological break for investors in Bitcoin. They looked at it as weak or failing or falling and not being supported. And I said, if it got back above the $50,000 mark, then investors would start to feel more positive about crypto and Bitcoin in particular. And here it is. Bitcoin is at $50,737 right this second. So it is back above that $50,000 threshold. And that is very important for Bitcoin and investors. Now, I hope to see a slow march along, not a big 10% move or 15% move in just a few days. I'd like to see a slow and steady march up and up and up for Bitcoin. I think that would be more healthy than any type of big move. Now, on Ethereum, in yesterday's Catalyst Watch video, I talked about Ethereum. Well, it didn't really look like anything happened in the big sell-off besides a big wick on the candle, because it was just moving sideways. It on the chart, on the daily chart, it only looked like it was moving sideways. It stayed in the same range that it was in to close out the candle, although the wick is way down there. I mean, it got down to a low of 35.75, which was an awesome buy the dip opportunity for Ethereum. Now, Ethereum definitely structurally looks much stronger than Bitcoin does at the moment. I mean, today, Ethereum is outperforming Bitcoin by about 1%. But on the chart, the structure of the chart, it just looks so much better for Ethereum. All right, now moving off of Bitcoin and Ethereum, let's talk about some electric vehicle companies. First up, Lucid, LCID on the chart. Lucid had some bad news today. It paired early losses, and it's down 5.1% to end the day. It's down nearly 1% in after hours after the company disclosed that the SEC is probing it for, I don't know, the company stated in an investigation that appears to concern the SPAC business combination, as well as a couple of the projections and statements that the company has made in the past. Now, does it matter? Does this will this amount to anything? I don't think so. I think the SEC is just in the electric vehicle sector, especially any companies that have gone public through a SPAC. They are a little more concerned because of the whole Nikola problem, right? Nikola was a very, very bad, I don't know, leadership. Definitely wasn't so good on Nikola. They had some false statements. Not a good light to shine on the EV sector, especially going public through a SPAC deal. So I think the SEC is just being extremely cautious, and that's what they're looking at with Lucid, just to make sure we don't have any other Nikolas on our hand ever again. So I think they're just being overly cautious in doing so. Now, a positive for the EV market, well, a company that took a different approach, not the SPAC approach, but a IPO approach to go public. Well, it's showing pretty big gains today after the quiet period ended. And all that means is that now analysts can post their ratings, and that is for RIVN. And RIVN, RIVN on the chart, the analyst, that is, posted a lot of positive ratings. Now, they were up 11.5% today. We talked about this yesterday in the Catalyst Watch video, that the ratings would start coming in as early as Monday pre-market, and they would roll out through all of the rest of this week. Now, whether they would be good or bad, I lean towards the side of being positive. For RIVN, I think they have a really good product. And the price targets that came in, some of them were a bit shocking to me. Others, they seem to fall right in line. Morgan Stanley came out with an overweight and a price target of $147. Bank of America came out with a buy rating with a price target of $170. Piper Sandler came out with an overweight rating and a price target of $148. RBC Capital Markets came out with an outperform rating and a price target of $165. Deutsche Bank came out with a buy rating and a price target a little on the lower side of $130. And Mitsu came out with a buy rating and a price target of $145. So you've got some good price targets there, and there can be some solid movement in RIVN in the next, 3, 6, 12 months from now with these price targets and these initial very positive ratings for Rivian. Now, I always talk about this $100 line for Rivian. I think it is very important for Rivian, because anything below that I view as a perfect buy the dip opportunity. And for Rivian, I've had this $120 to $125 area here, this range, this price range that I think is a good area for Rivian to get up to. So if you can buy the dip on Rivian going down to $100.32 today, that was today's low, then that was an excellent place to buy for Rivian. So again, I'll just reiterate what I said in the Catalyst Watch video. $100 and below is a great buy the dip opportunity for Rivian. All right, Tesla today, it was pretty much flat, TSLA. I said yesterday in the Catalyst Watch video, the $1,000 level for Tesla is an important level for Tesla. If we look at the 50-day moving average, that it's at $989.17. So if Tesla can stay above the $1,000 area, then it is definitely in a very bullish and positive structure. And I still believe that today. They were down 0.5%, pretty much flat. We'll call that flat. They're down 0.1% in after hours. So that's also flat there for Tesla. So they're performing very well. But you can see on the chart here, they are more in a consolidation pattern. They're moving sideways to slightly lower, just barely on the chart here. The RSI has tipped over. It's now down to a 58.65. which is kind of right in the middle. Remember, 30 and below is oversold, 70 and above is overbought. So it's perfectly in the middle, happy right here. There was some news about Amazon, AMZN, today, that Amazon has begun to purchase or charter private cargo ships. And this is according to a CNBC article. Now, if Amazon has to go out and charter their own cargo ships to get product from one coast to another, that has a lot to say about our own problems with the supply chain right now. And that's something that is hurting a lot of companies and their ability to get products where they need to be for customers to spend their money, right? So that's interesting about Amazon. Okay, a couple earnings that came out today. GitLabs was one. Ticker symbol is GTLB for GitLabs. They posted their Q3 earnings. They were up 1.3% during the day. They are down 1.8% in after hours. Now, they came in at an EPS of a loss of 34 cents, but that beat by 14 cents on revenue of $66.8 million, which was a 58.5% gain year over year. And that beat by $7.6 million. So, yeah, came in. It's okay. Next one that came up, we talked about yesterday in the Catalyst Watch video. I mentioned how it was down to the bottom of its trading channel, and that is Coupa Software. COUP is the ticker symbol. This one, we can see that it was out of its trading channel down here at the bottom. They were up 1.9% during regular session. They're down 12% in after hours. Now, they came in with their Q3 EPS of 31 cents, and that beat by 29 cents, and revenue of $185.8 million. That was a 39.8% year over year gain, and that beat by 7.9 million. Now, their Q4 2022 guidance, and this is why the company is down 12%. Earnings look good, right? EPS came in beating, revenue came in and beating. It's the guidance that's hurting the company. Total revenues for Q4 are expected to be 185 to 186 million. The estimates were $184 million. So they're not really bringing in too much more in the Q4 than what they have already said that they would. that's what's hurting the stock in after hours. Really weak guidance. Now, we're going to go into a bit of a deep dive here on a couple of companies that I find interesting. Now, the first one is known for its whimsical nature. It's a quick service burger chain, Jack in the Box. Ticker symbol is Jack, J-A-C-K. Jack in the Box today. Now, it was down 4% in regular session, flat in after hours. Let's scooch this up here a little bit so we can see 2021 here on the chart. That's 2021. It's in a negative and a weak structure. Investors didn't like what happened with Jack in the Box today. Now, Jack in the Box is totally thinking outside of the box today because they acquired Mexican restaurant chain Del Taco, and their ticker symbol is Taco, T-A-C-O, for $575 million in cash. Now, that would represent a $12.51 a share purchase price. Let's look at Del Taco here, T-A-C-O for the ticker symbol. Now, look at this stock. It's up 66% today. 66%. It got all the way up to the purchase price of $12.51 and then stopped, right? Stopped right there because that's what Jack in the Box is paying for Del Taco, $12.51 per share. So anything over that, and then the stock really becomes not really overvalued because the price that they're paying was a 66% premium on the closing price from Friday. So anything over the 12.51, and investors, I think, are just starting to maybe get a little greedy on their part. And what they would be doing is making the premium that Jack in the Box is paying for Del Taco lower, right? So that's what's happening. A nice run for Del Taco today. 66% move in a day. That is a whopping success right there. So it is a 66% premium over Friday's close, like I just said. Now, perhaps explaining why Jack in the Box investors are feeling some, let's call it, indigestion over this transaction. Let's go back to Jack here, J-A-C-K, to look at their stock here. Now, despite the significant premium that Jack in the Box expects the deal to be very beneficial, okay? Investors obviously don't like the premium that's being paid, but executives at Jack in the Box think that this is going to boost their EPS by mid to single digit rate in 1 year, and meaningfully thereafter, maybe even more so. However, though, considering that Del Taco generated pedestrian comparable restaurant sales growth of 1.8% last quarter, the acquisition does not look like a bargain. And that's why investors rushed in to Del Taco and left Jack in the Box down 4%. Now, strategically, though, there's plenty to like about the deal. Each company is an underdog of sorts in their relative spaces, with McDonald's, restaurant brands, Burger King, and Wendy's dominating the burger market, and Yum Brands, which is the owner of Taco Bell, leading the Mexican food restaurant. The combination of Jack in the Box and Del Taco beefs up their capabilities and scale, potentially enabling the combination or the combined company to gain share. market share, that is, especially in the Southwest US, where Del Taco has a strong presence. For some perspective, Jack in the Box restaurant, its base will expand to 2,800 from about 2,200, compared to roughly 5,800 US restaurants for Wendy's. Moving forward, Jack in the Box plans to expand the restaurant base for both brands, reaffirming its long-term target of 4% annual unit growth by 2025. One of the more attractive aspects of acquiring Del Taco is that 99% of its restaurants have a drive-through, providing it with a key competitive advantage over Mexican food restaurants. Additionally, Jack in the Box estimates that it will achieve run rate cost synergies of about $15 million by the end of fiscal year 23, primarily through procurement and supply chain savings, alongside digital and technological efficiencies. On the marketing side, it will be interesting to see if Jack in the Box, their commercials, they can be eccentric at times, right? So it'll be interesting to see if that style carries over to Del Taco, assuming the deal is indeed completed in the first quarter. To stand out in the crowd, Jack in the Box's advertising campaigns and promotions, such as its Nabiscus, the hot sauce inspired munchie meal, or attention grabbing and edgy, but maybe not fitting for every Jack brand, Jack in the Box maintains that it shares many of the same attributes as Del Taco. Oh man, including a commodity or oh my goodness, I can't believe I'm messing this word up. What I'm trying to say, the similar aspects between them with the late night customer, right? So perhaps infusing its culture into a Del Taco won't be too challenging because of the late night crowd that's going to Jack in the Box, and now, hopefully so, Del Taco in the future. Although the combination of these two underdog brands looks like a good fit, investors do appear to be balking at the price tag. To finance the acquisition, Jack in the Box is taking on more debt than some investors may like. There is also execution risk to consider as Jack in the Box integrates with Del Taco's operations, potentially causing the company to take an eye off the ball in a highly competitive environment. The bottom line, it is a very interesting combination, to say the least, and only time will tell if their rich premium was well worth it. What do you think about Jack in the Box and Del Taco and their acquisition? I think it's interesting. It will definitely help competitively, but do they fit culturally? I'm not so sure. But as I said already, time will tell. Let me know in the comments what you think about Jack in the Box acquiring Del Taco. Again, Jack in the Box, ticker symbol Jack, J-A-C-K, and Del Taco, ticker symbol Taco, T-A-C-O. All right, moving off of that, onto another company. Here's a perfect example of what Patreon members get. This is our advanced analysis or stock idea. This is ARCB. Ticker symbol is ARCB. ARCB Corporation. This is something that we organized this weekend to add for Patreon members. We're adding our top 25 growth companies. We're also adding a top 25 value companies. We're also adding a weekly momentum stocks for the week. Those are some new additions for Patreon members. Now, ARC Best, they come into the picture as a value play. Now, ARC Best is giving more than its best as the trucking industry keeps on wheeling on, with high growth stocks having reeled over the past couple of weeks as valuations became more relevant than speculative growth. I wanted to highlight a consistent grower in our top 25 value list. And again, this is a Patreon member benefit. This is the type of information they will be getting. Exactly what I'm saying to you right now will be sent to Patreon members in the future on this type of analysis to give you a real clear idea on a company that is in our top value list, that's in our top growth list, or in our momentum list of companies. ArcBest has been hauling since I first looked at this trucking company to add to our value list back on October 4th at a $65.47 share. Shares have climbed or continued to climb, and they're now up 56.8%. I also mentioned on the live streams probably a month or so ago, maybe a little bit further back, it was towards the beginning of our daily live streams. I talked about a couple of ETFs that were in the trucking space, and I said that they would do really well over the next coming weeks and months due to our supply chain problems. Now, ArcBest is a trucking logistics company that has, over the years, expanded from its primary less than through load business to become a full-scale provider of end-to-end supply chain services, including truckload, international, air and ocean, and vehicle maintenance and repair. And in September, the company also added Molo Solutions, an asset-light company that focuses on freight brokerage services that instantly made ArcBest a top 15 U.S. truckload broker. Although it may seem as though ArcBest is now priced to perfection given the massive gains that it has notched over the past 4 months, its solid valuation of 13 times fiscal year 2021 earnings, healthy long-term debt to equity ratio of 29%, and plans to retire about 4% of its outstanding shares by the first quarter of 2022 indicate quite the contrary. Furthermore, ArcBest has plenty of tailwinds that more than offset some of the industry's headwinds, such as labor and equipment shortages. One tailwind is excellent pricing power. For example, ArcBest noted during its Q3 earnings call that it secured an average 8.6% increase in contract rates negotiated during the quarter for its asset-based customers. This is the result of a sizable supply-demand imbalance. Trucking companies such as J.B. Hunt, ticker symbol JBHT, and XPO Logistics, ticker symbol is XPO, are experiencing industry-wide labor shortages. At the same time, factories were forced to shut down in certain regions, such as Vietnam, Indonesia, and China, due to COVID-19 over the summer and the fall of this year. Because many multinational corporations like Nike, ticker symbol NIKE, import the bulk of their product from these areas, those disruptions have left many businesses racing to get delayed products delivered as soon as possible, especially with the holiday season in full tilt. In addition to labor shortages, trucking companies are facing equipment shortages as semiconductor constraints continue to weigh on truck manufacturers' ability to produce enough vehicles. For example, in late October, one of the largest medium and heavy duty truck manufacturers, Pacecar, ticker symbol PCAR, noted that it produced 7,000 fewer trucks than it would have if it was not for the chip shortages, resulting in a 9% year-over-year decline in trucks produced. The company also forecasted flat growth in trucks produced in Q4, indicating that the situation is not improving swiftly. The supply-demand imbalance has also led to strong results for trucking brokerages. For example, one of the largest brokerages, C.H. Robinson, ticker symbol CHRW, grew its revenues 48.3% year over year in Q3 and 52.5% year over year in Q2 this year, and expects solid results moving forward as companies look to brokers for help navigating a capacity constraint environment. Just look at Amazon brokeraging or contracting out their own cargo ships, like I mentioned earlier. I think the brokerage business should continue to expand as well, as brokers work with thousands of shipping companies on land, sea, and in the air to secure the most efficient and valuable method of delivering freight. These tailwinds led to excellent Q3 results for ArcBest. The company posted another record quarter with total sales exceeding $1 billion for the first time in the company's history, even though the Molo acquisition did not close until the beginning of November. Double-digit growth was seen across each segment as transit prices continued to rise rapidly in the quarter. ArcBest also announced in November that their numbers last week, in the period, total sales jumped 45% on a per-day basis year over year, virtually unchanged from October's robust 46% increase year over year. This is a reflection not only of the continuing demand for ArcBest services, but also of the overall strong trucking industry. To finish up, with growth stocks starting to fall out of favor among some investors, I think ArcBest is a solid play on a healthy trucking industry with numerous tailwinds heading into 2022. But as always, remember to add a stop loss whenever you're making a trade. It's always a good idea. All right, what do you think about ArcBest? Do you think the trucking industry is still on a roll, or will the headwinds be too strong with truck and labor shortages? Let me know in the comments what you're thinking. Let's see here. All high valuation stocks have been hit today. Yep. Any new strong support levels for Zscaler? All right, let's pump them in here. Ticker symbol ZS for Zscaler. Now, they had a great earnings report. They really did. Let me mark that with a vertical line here. Now, they sold off. Oh, I guess I already had a vertical line. It just didn't load fast enough for me. All right, so with Zscaler, good earnings, but of course the company had run up, right? And it was in a reflection point here. Now that it's broke this support line, it's broke the 50-day moving average, people are taking profits on this run up. To be quite frank, looking at the structure and the environment that the market is in right this moment, I would not be surprised if it continued falling to its 200-day moving average. And right now, the 200-day moving average is at $237.81. Right now, the RSI, well, it's reading a 34.95, so it's not oversold yet. So that's telling me there's more room for it to fall. Now, there was a bit of a bounce in it today. It did get as low as $265. It's at $275.20 right now. So that's a positive. But if the current market environment stays to a risk off or a defensive posture, then growth companies, especially in the technology sector, their valuations are going to continue to get hurt. 200-day moving average, again, that's probably not too far off. What is that from where it's at right now? Let's see. From where it is now to that 200-day moving average, that's about 13%. It fell 12% today. So it's not that far off. Another day of heavy selling pressure like today, and it'll be there. Now, the selling volume today was really high. It was at 7.4 million. Now, the average volume, it has ticked up over the past couple of days, and it's at 2.4 million right now. So more than double the amount of volume on selling today. Let's look at any other support areas here. Man, this thing has just been on fire. You got to look at this too. If we go all the way back to the beginning of the history for this company, it really took a while to get going. 2019, it started to run until, I guess that would be January of 2019 through December of 2019. And then it fell. And you're looking at this run up right here. Man, support, there's just not a lot of support for where it's at. But let's see what we can find here for support. All right. The next area of support is probably around where it bounced today, maybe a little lower. I'm going to call it 261. That's an area of support. And remember, when we're doing this, wrong color. When we're drawing our lines on a chart and we're looking for support, resistance, or trading channels or trend lines, you want as many touch points as possible, okay? So this 260 price point right here, the last time that it touched it was on October 11th, right before a really nice rally began. So we've got some bouncing around here at the end of September for several days at this price point. We also had a drop on September 13th that stopped at 260 and 12 cents to be exact. And then we also have this one here on August 25th. So we've got a bunch of touch points here. That's solid, right? That's what we want to see. From 260 all the way up to where it's been trading at these highs, these all-time highs, there's no support. So that's why a company can do what Zscaler has done. Drop 8%, drop 5%, drop 12%, because there's no support in these areas except for the moving averages. So once those moving averages get broken, then we have to start looking for actual support areas of price. Now, from the 260 area, we've really got to go down a little bit further. Of course, we've got the 200-day moving average, but with the 200-day moving average right now, there's not a lot of price support there either. So if I put a line where that 200-day moving average is right now, right here, and then we go across to this middle area, there were a couple of times we might have 1, 2, 3 touch points there, 4, 5 touch points, call it 6. This was an area where it had resistance, and then that resistance turned to support on a back test, but it also used that 21-day moving average also. So we've got that 200-day moving average. That's a possible area as well. So that's 2 areas of possible support. 260 and let's call it 238, rounding up. That would be an area where there are 2 levels of support. Now, if it broke that 200-day moving average, if we measure from that top to the 200-day moving average, that's a 37% pullback. That's steep. That is steep. So I'd be watching those 2 areas right now as potential support areas. But of course, nothing is guaranteed. But we do have some touch points there and some significance to call them support levels. Let's see if there's been anything else about Zscaler since their earnings. I don't think there has, but I'll double check. Loading. All right, there we go. All right, they are going to be at a conference on December 8th. Actually, 2 conferences, both on December 8th. Let's see here, December 6th, so this would be today. Zscaler was downgraded to underperform from neutral. That didn't help. And, you know, that's kind of predictable. The company just had earnings, right, which is a big motivator and a big catalyst. The company was at all-time highs, right? Both of those things are now in the rearview mirror for at least, you know, the next 3 months or 2.5, whatever it may be. 80 days for Zscaler. It's not surprising that an analyst would downgrade the stock because of those 2 reasons. And there's no catalyst at all. Let's see here. So Zscaler hit 2-month low this morning. Yeah, all it is for December 6th, it's the downgrade. But they did not share a price target at all. They just downgraded it, but remember, when they had their earnings report, the earnings report was good. The earnings report was solid. This pullback right now, it's temporary. The stock is going to get back up to that channel at some point. Because also during their earnings report, and correct me if I'm wrong, but I do believe that they upgraded their guidance and they gave better than expected guidance for next quarter as well. So it's still positive for the stock. This is just the overall market changing their direction, changing where they're going. Is there any way we can look at where the median holding price is for any stock? For example, for Zscaler, what is the percentage of stockholders at 260? What is the percentage at 3? That's an interesting question. I don't know if there's an answer to that one. The closest thing that we have to something like that is either A, the options market and the put call ratio on certain entities. Oh, why did it do that? Log me out. Hold on here one quick second. All right, just had to log back in here. There we go. But the options market, looking for the put call ratio, the sites that are out there on the internet right now that you can use for free, they're delayed. So that information, it's delayed information, so it doesn't really help you. The other way to, and again, I don't think this information's out there. I've never seen it before. It is interesting. That's a really good question. The other way to kind of judge, and the market's closed right now, so we can't see it, but the bid-ask price for a security. Let me go back here to crypto, because that's trading. Well, why am I doing that? Just go to BTC, silly. All right. So on the right side of the screen here, see this red and green, these different columns here? This can show you where people are currently buying and for how much. How many orders are coming in for a specific price point. That bid ask, and it's not showing me here for Bitcoin. But normally what it would do is for a price point, it would say, you know, that there were 1,000 orders at 275. There were 500 orders at 264. There were 50,000 orders at 274. There were, you know, 20 orders at 278, whatever it may be. That's just the way that you can see on a daily basis, and it's called it's level 2, and it's usually not a free feature in Robinhood, but Webull does show you. It's just not showing me here for crypto. Those are the only two ways that I can kind of get to an answer for your question, because there's not specific data. Like, it would be very interesting to see, you know, how many people are holding at a certain price point. That would be very valuable information, but that's not out there. That's not out there. But that's a really good thought, though. That's a really good question. Okay, so with Zscaler, are you in a trade with Zscaler, or did you buy in and you're holding it for the long term. Because if you're in a trade for this, I'm not sure that once this thing broke that 5th-day moving at, well, I can't say for sure because I don't know the details of your situation. I'll give you an example. If I was in a trade for Zscaler, a trade, not an investment, but a trade, and I got in, let's just say I got in at up here at, let's call it 345. Okay, let's say I got in at 345, $345 per share. I would have a stop loss on that order. So if it fell, whatever percentage base that I set the stop loss to, then the order would have automatically been executed for, if I set it for 2%, then maybe I would have lost 2% on the trade. If it ran up 5% and then it pulled back 2%, then the order would have automatically been executed and I would have made the difference, which would have been a 3% profit. Stop losses are very important when you are trading. Stop losses are important when you're investing, only to say when you are getting into a position, you're just starting the position. It's not best to start at all-time highs, definitely not. And it's probably not best to start around earnings, because earnings can be one of the biggest catalysts a company can have for the whole year. You know, the 4 earnings, those are the biggest catalysts that some companies have all year long. So if you're investing and you're just starting your position, a stop loss can be good, but you would want a much bigger buffer. You wouldn't want something as small as 2%, maybe 10% or 8%. But if you're going in it for the long term, that means you have an investment thesis, you have charted out on the stock chart where the different support levels are, where the trend lines are, and you know what your entry price is. That's why I'm saying a stop loss isn't necessarily as important as trading. With trading, it's almost nearly a must when you're trading, because you don't want to get stuck in a trade that you're making where it loses, 30% of its value over a couple days. That's a trade that you would not want to be in, because there's no telling how much further it could go down, right? So just a couple examples. Could you look at Facebook? Yes, I can look at Facebook. So there's Zscaler there. Facebook, also known as Meta companies or Meta platforms, excuse me. All right. Facebook, not a bad day here, up 3.5%. That was a pretty nice rebound for Facebook. All right, so we had a couple lines here for Facebook. We've got a support area at $324. And then, of course, the 200-day moving average was up there. But this was now see, Facebook came down and it bounced right here on this support line right here near that $300 level. It got down to $299.50. That was a really nice bounce. So Facebook's got support at $300. That initial bounce was 3%. It is currently up 6.6% from that bounce. So that's a nice move right there. All right, so now that it's moved above this $315 area, that's a support area for Facebook right there. It's not a strong support, but it is support nonetheless. There was also this one little area forming down here that we looked at last week where there could have been support, maybe around the 310 to 38 area. But Facebook, it has, there we go, moving a little slow. Facebook's RSI, it is slowly but surely hooking up. It's at a 32.2 right now, so it's just right there teeter-tottering at oversold, but it is reflecting. It is turning to the upside, which is a positive. Volume today was 21.7 million on an average of 20.7 million. So pretty average volume for today. All right. So Facebook is looking more positive right now. With the RSI turning up, that's good. Volume right around average, that's okay for a stock moving, turning around and bouncing like this. We had the bounce off the $300 mark. That is positive, and it is now sitting above the 315 support area. So Facebook's looking good with this short-term structure right here. How long would you give it to confirm? If it would back test this 315 tomorrow and bounce and move off of that, that would be a positive development. That's what I would want to look for tomorrow. Right now it's at 318. If it came down to 315 and bounced off of that, that's positive. If it did dip below that 315, how far does it dip below 315? That would be the question. And then if the overall market seems to be more, I don't want to say risk on, because that really includes growth stocks too. And the market wasn't risk on today because a lot of growth stocks didn't make it either. So if it bounced off 315, if it dipped below 315, how far does it dip? And one thing to remember with Facebook is a company that makes money. It knows how to make money. So if you're investing in Facebook, then dollar cost average, build your position. Facebook is a company that is going to be around even through these changes that it's making. If you're in a trade for Facebook, then, well, I don't know your specifics, but 315 will be a good bounce, and that would be a very positive sign. If it dipped below 315, it really doesn't have much support, maybe around 308. Because that's what we had circled over here where it bounced off of that, where it dipped below 315. Let me move those. See here, it had risen above that 315. It dipped below it, and then it bounced to go above the 315, and then it continued moving for that last rally that it was in. So how far did it go here? It went to $308.11. So 315, maybe 312, maybe at the lowest, but if it goes below 312, then it might be turning negative. So there's not much room there. My best case is a retest of the $300 and a push up, but IDK if I'll get that opportunity. You might the market right now is so shaky and it's so nervous. The smallest little thing rattles it. And remember, on Friday, we've got CPI data coming out on Friday. That's going to move the markets. All right. If inflation comes in hotter than expected, and I think it's a 6.7 is what they're expecting, then the market is liable to switch real quick to a risk off sell. So Thursday will probably be a flatter day because investors will be waiting for Friday and the CPI data. So we really have what, Tuesday and Wednesday of this week for there to be some positive and some growth in the market. And then we may get a flat market on Thursday. And then you could get your opportunity maybe on Friday if inflation is higher than expected. You could probably get real close to your goal there. Obviously, depending on how much growth we get Tuesday and Wednesday, because those look like they could be positive days. All right. So there's Facebook. If you have any questions, please feel free to ask. That's what we're here for, to answer your questions to the best of our ability. If there's no other questions, then I'm going to continue on. There's a couple other stocks that I did want to talk about. So we can move into those if there's no other questions here. Okay. All right. Let me get my cursors right here. Okay. Oh, it's good to see Bitcoin is still holding above that $50,000 level. Let's see, we've been out here now for just over an hour, so it's holding. That's good. That's real good. Okay. All right. Moving on now to our next one. All right. So there is a company I've wanted to talk about now for about a week or so. We keep running out of time to talk about it. It's called AMBA, and the ticker symbol is AMBA. AMBA is a real interesting company. You can see here the past two earnings have been real movers for the stock. Prior to that, not much. You can see it's been flat. It had a run up though back here November a year ago, but then flat for the majority of the year. But these past two quarters have really helped to move this stock. Now, it did come down on Friday, as most growth companies did. It came down 3.4%. But Ambarella, it makes low-powered system-on-a-chip semiconductors used in high-definition camera applications and artificial intelligence processing of images and video. Now, after the company posted a upside Q3 result featuring its strongest revenue growth in over 5 years. This is a company that has been out there It's well established. It is a growth company. And it's basically been waiting for technology to catch up. Technology has caught up. They had booming demand in the auto industry, and it's the main spark that's igniting Ambarella's top line growth in their earnings, which has now accelerated for 5 straight quarters. While the company isn't immune to raising or rising costs and inflationary pressures, as most other growth companies are, a favorable mix of product that is skewed towards pricier computer vision chips is offsetting those headwinds and driving margins higher. The company does anticipate that bottlenecks in the supply chain could cause some orders to be pushed out maybe into Q4. But their Q4 revenue guidance still came in above the consensus estimates for Ambarella. Now, Ambarella's resurgence is what I'll call it, can be tied to a strategy shift that was implemented several years ago that lessened its dependence on consumer-oriented manufacturers like GoPro, while bolstering its investments in artificial intelligence, AI, and computer vision technology. So this company made a major shift in consumer-facing camera processors, like what you would find in a GoPro camera. They completely said, GoPro, we're not going to make cameras, processors for you guys. We're going to focus developing our business for something else. And that something else was AI and computer vision. Now, that's an industry that was in its infancy. It's still a little baby right now, the whole industry. It is really just starting to get roots and take off. This transition was a painful one for Ambarella and, of course, its investors, resulting in consistent year-over-year revenue declines and an accompanying plunge in its stock. In fact, during a stretch in fiscal year 18 to fiscal year 20, revenue dropped 8 consecutive quarters as the company struggled to replace the loss of the GoPro business with new revenue streams. It was tough. However, during that time, the company began racking up design wins for its new computer vision algorithms in SoC, which is System on a Chip. System on a chip across the automotive and security camera industries. Some of those design wins ultimately translated into significant orders for chips for advanced driver assistant systems, ADAS, as we know it today, right? In automobiles, the rear view cameras that we have in our vehicles, the upgraded surveillance cameras for object detection, terrain mapping, and facial recognition. After those initial orders, momentum has only strengthened as automakers enhance safety and ADAS features, increasing the amount of computer vision content per vehicle. Ambarella's recent deal with electric vehicle maker RIVN and ride-hailing company Uber, building upon last quarter's sequential growth of 10% for the automotive business, Ambarella reported that Q3 automotive and Internet of Things revenue grew more than 10% quarter over quarter. Strong demand in the auto industry, coupled with higher ASPs for computer vision-based chips, brought its non-GAAP gross margin to 63.1%, above its guidance of 61%. Those bullish dynamics are expected to continue throughout Q4. as illustrated by Ambarella's forecast for a gross margin of 64%. A minor blemish is that the company's Q4 revenue guidance of 88.5 to 91.5 million only slightly edged out the 88.2 million estimate. For a high growth tech stock, modest upside guidance is oftentimes viewed as a disappointment. In this instance, investors are giving Ambarella a pass, likely because the company stated that some orders in Q4 may be rescheduled to ship at later due dates to component shortages at other companies. In other words, it's timing issue rather than a demand issue. That's causing the company to be a bit conservative with its outlook. Overall, Ambarella's Q3 performance and accelerating growth show that its AI and computer vision-based transformation is totally paying off, and its positioning to capitalize on key trends in the automotive and security camera markets. Okay, finally, after many days, I finally got my thoughts out there on Ambarella. I totally been wanting to do that. Okay, now on to your questions. In mode support at 65. Think it tested support there earlier. And then, do you think DraftKings bounce back today is a fake out? Pins and in both around 42. Okay, first off, let's go with in mode, INMD. Excuse me there. Okay, in mode, while that's loading, let me get it loading over here. INMD going. All right, so we had this marked out for in mode. There is support here, a zone with 68.50 being on the low side and 81.75 on the high side. If we look at this pattern, look at this, okay? It sold right through this zone. Then we had a green day, red day, green day. But the green day's candle, all right, this is important here. Look at the close yesterday, okay? It closed at $68.06. Today, it closed at $68.75. That's not a real big move. I'd be concerned that this 68.50 that we have marked off here with this blue line is acting as resistance right now for the stock, because it got as high today as 69.55, but it could not hold above this resistance line here, because right now it's at 68.49, so it's a penny under this line here. So I don't take this as being very strong. I take this as being weak. And this 200 day moving average that we've got circled here in purple, that price point is 57.07. I think that may be in play still. So in mode, I'm thinking this is looking negative. It's not very positive that it couldn't get back up into this zone here and then close and stay above it. So that would be a concern of mine. That the RSI, it really hasn't turned up yet. And volume was really light today. Volume was under the average. We had volume at 1.5. The average is 1.9. So low volume. This thing is still oversold at a 20.9 on the RSI. The RSI has not turned up. It is only flat. And then it couldn't stay above to get back into this zone. So it's looking weak right now. The technical structure, it's looking weak. I know we talk about this one nearly every day. Right now, it's looking weak. All right, so there's in mode. You had $65 as support there. I don't think that would be support. Because if we go and we look for, we look at $65, there's not much there to really support 65. 65. See here, 65.14. I'll put a line there, but I'm going to change that shade. I'm going to low to a not so bright, a little lighter. Really didn't make any difference. Okay, so on that second line at 65.14, we got a real close to a bounce off of it right here on September 20th. That's one. September 2nd would be 2. August 30th would be 3. So there's a few touch points there at 65.14, but not a lot. So maybe this little zone here between 65.14 and 68.75, maybe that could be a zone. I'm not going to say it is yet because we've got one candle. That's not going to tell us a whole lot. Now, I'm sure if we went in and looked at this on a more micro level here, I'm sure you might find your 65 area of support. If we look right here, okay, so that 65, we have one candle go down to 63.21, only one candle. We have one candle going to 65.19, and that's it. This is the 1 hour chart. So when we look at it on a daily, hourly by hourly here, you only have 2 candles that broke under it, and there's not a single candle that has bounced on it or touched it in any other way. So I still think it looks weak. That would be my call. And 65, I'm just not sure there's much support there at 65. Sure, the candle wick goes there, but it's just one wick. That's not enough for us. All right. Now, if it could tomorrow, if it was green tomorrow, and it got back up into this range up here, and it could stay above the 68.75, that would be a positive turn for it. All right, what was the next one here? DraftKings, DKNG for DraftKings. Do you think DraftKings bounce back today is a fake out? All right, let's look here. It's been a while since I looked at DraftKings. All right, 8% today. Why did it move 8%? There must have been a reason. I can't imagine a growth company like DraftKings moved 8% for no reason. All right, it's loading. There's nothing. Interesting. Okay. All right, let me adjust this. So it is definitely, it's fallen out of this zone that I liked for DraftKings, this 42 to 53. That was a real nice zone. Now, the candle today, 30.95, up a little bit. So the bottom of today's candle and yesterday, let's see here. This is a 27.52, a 27.48. That's interesting. All right, what was this again? 27.52 and 27.48. Okay, so let's put a line there. Change that color back. All right. So it's interesting that yesterday's candle, or Friday's candle and today's candle are pennies apart from their bottoms. But let's go see if we've got anything to support this area. So if we go back here, this would be July of 2020. We have a low of 27.54. Okay, and a bounce off of that. And then we go back here to May 27.57, and then we have 27.53. So we do have some support here at 27. Let's just round it, even numbers. Just call it 27.50. It looks like we've got some support here to back up 27.50 for DraftKings. So today's move, okay, let's look at some more data points. So volume was 24.4 million, and average is 17 million. So good volume on today's move. RSI is still oversold at 18.7, although unlike in mode that we looked at just prior to this one, the RSI was flat. The RSI here is starting to make a turn, make like a hook shape and come back up. So that's positive. The above average volume is positive. And this line here, 27.50, looks interesting. But an 8% move, that seems odd. On no news. Why was there such big volume today? And there was no news about it. No upgrades, no downgrades. Nothing. That's interesting. Okay. This one's, I can see the structure here. for this maybe being a support area, but I'm not convinced of it yet. I need a little bit more data. In 8% or no news, it does seem like a really big move. Usually it's 8% and there was an upgrade or something, right? But sometimes growth companies, they can move in mysterious ways. All right, so I'm a little cautious on DraftKings here. I can possibly see some support stepping up at the 2750 area, and possibly maybe we get a green day on Tuesday, Wednesday. But then if we get inflation data on Friday that comes in hot, that could totally wreck any progress made in building back on this stock price. All right, what else did we have here? Pinterest, P-I-N, wrong one. P-I-N-S. Oh, I haven't looked at Pinterest in a long time. P-I-N-S. All right, 5.5% move today. It is outside of its. CMB said it was oversold and new buyers came in. Yeah, it was oversold big time. Yeah, on DraftKings. Yeah, it was totally oversold. And that RSI is just starting to hook up. But I would still be cautious that 1 day's worth of positive data, over volume being above average, RSI still undersold, but hooking up. Technically, these are positive signs here. And that potential support line at 2750 could be forming, but these are all could be's, right? They're positive signs, but they're nothing that's going to hold water. Not yet, anyway. Okay, I mean, especially if the inflation comes in hot on Friday. Okay, this thing's just been all over the place. My goodness. This one has a nice hook on the RSI too, and it's not as oversold as DraftKings. Pinterest is actually at 20, is that 25? Yeah, 25.3. So it's still oversold, but not that oversold. Let's see, volume was just slightly above average, 11.4. Average is 9.6. All right, so what was this low today? 34.56. What do we have to back? We don't have much to back anything up here. Yeah, Pinterest, this thing could fall as quickly as it rised. This 5.5% that it got today, it could just as quickly lose that tomorrow. There's not much support here at all. So Pinterest does need to find a floor. It does need to find a place where it can start to build a new base, because it hasn't been able to build a base in a while. Like, maybe it was starting to build a base back here in December of 2020, maybe. But then it's been all over the place. It doesn't have a base of support yet. And the second place that maybe there could be a base of support is back here when it first became public. But there's not much. It looks like we might be able to maybe call some support, maybe around 33.50. I'll put a line there. No, not there. Right there. Maybe some support around 33.50 for Pinterest, but it needs to build up a solid base. And it just really hasn't been able to do that. And until it does, its movements are erratical. I mean, there's no rhyme or reason. Now, it is nice to see that since the 18th of October-ish, volume has been up. That's a positive sign because Pinterest has fallen back to nearly the price that it was when it went public. So that's a good sign. But it's just so wobbly right now. There's really nothing to hold it up. So on Pinterest, it needs to build a base. It needs to find a place where it can consolidate for a while and build up that base and then move off of that. I would not be in Pinterest right now. I mean, it could easily move 5% positive tomorrow, or it could be 5% negative tomorrow. For me, it's a coin flip on which way it could go. There's just no base here for it. Let's see here. I'm in both around 42. So 42 for Pinterest. Yeah, I can see why. If you got in at 42 around the beginning of November, I could see why, because it was trying to build a base there, but it just couldn't hold. And right now, for Pinterest to build, LOL, completely agreed. Well, that's good. That's good. I'm glad. Enjoying ride with pens. Yeah, I mean, I believe Pinterest one day can definitely get above where it is right now. It's just going to take time. It's just so wobbly and it's got no base to support itself. It's almost like it just moves on emotion. Quite frankly, a price at 42, that is, if you're going to hold that for 5 years, you'll get your money back and some. But it's going to be a buy and hold for Pinterest. Let's see here. Was out around 58 for Pinterest. You got out at 58. Okay. Any other questions? I'll be happy to answer any questions you guys have. Otherwise, that wraps it up for me. I got to talk about the stocks that I wanted to. Did like 3 swing trades, 4 and 8. Profit every time. Cool. Good. Good. It's always good to make a profit. All right. Well, let me just run over here and see if anything came out while we've been live. Otherwise, I'll wrap it up for tonight. Tomorrow's market, it has the potential for being positive. Tomorrow's Tuesday. Wednesday has the opportunity to be positive as well. Now, Tuesday is going to be tomorrow. Is going to be a very busy day. a very busy day. There's a lot that in the link in the description here is a link to the Catalyst Watch video. Every Sunday evening I do a video called Catalyst Watch, and I talk about what I think is going to move this week ahead, why I think it's going to move, and what to watch for. It's the most important video that I do all week, and there are some pretty big potential movers tomorrow. Let's see here. I think we've got SoFi is a potential tomorrow. For SoFi, there could be some selling pressure because the redemption of public warrants does expire. Just a small one. It may not amount to anything. One of the big ones is Vacasa. Their ticker symbol is, let's see if it's live yet, VCSA. It's not live yet. This is one I'm watching that I think could move pretty rapidly. The SPAC is TPG Pay Solutions. This is the SPAC right here. TPGS. They are bringing Vacasa public. Now, Vacasa is similar to Airbnb, except Vacasa owns their properties and they rent those properties to other. They're one of the largest in the US. This one I expect to do pretty big things when it is finally on the public market. Also, for Monday.com, the IPO lockups expire, so that's going to provide selling pressure for MNDY, Monday.com tomorrow. Morgan Stanley starts their space summit, so your favorite space stocks, watch for movement in them. There's a lot of different space stocks that are scheduled to speak during this summit. And whenever an executive, someone from the executive team speaks at a conference, a summit or something, there's always nuggets of information you can learn. So be on the lookout for space stocks starting tomorrow. We also have AutoZone's earnings coming out. AZO is the ticker symbol. Now, AutoZone was pretty flat today. It is very possible that their earnings are already priced in. But nonetheless, they should, I think they should beat on earnings, but I do think it is priced in. We also have Coinbase. They're also in a having a fireside chat. Again, nuggets of information can be revealed in those. We have Builders First having an Investors Day. So whenever there's an Investors Day, if companies are talking about their future and what they're doing with their business, that's always positive and can move a stock. Builders, First Source, they were up 3% today. You can see they're kind of stalled out up here. They've been on a beautiful run, popped up on earnings, but they've stalled. I'm not sure how much higher that they can go. Also, there's another SPAC deal, SVOK, Seven Oaks Acquisition. They are bringing Boxed public, BOXED. They are bringing them public, and Boxed is like a Costco, a Sam's Club, a big box store like that sells bulk items. Box is the exact same, except there's no store that you go to. Everything is you order it on an app and then it's shipped to your door. Really convenient. I like that one. Let's see here. What else? We got Toll Brother earnings tomorrow. I think they're getting stretched out too. Stitch Fix also has earnings tomorrow. SFIX. This is one that I would totally stay away from. I could totally see this one going lower off of earnings. It was up 3% today, but it's at the bottom. You can see this downtrend it's been in, and it's at the bottom of that channel. It is worth noting, though, that the past 2 earnings, it has gapped up. So there's that piece of data. But I do get a warning to stay away from Stitch Fix for their earnings coming up. They're oversold 18.7 on the RSI, so that's down. Dave & Buster's also reports tomorrow. Ticker symbol is PLAY. I'll be curious to see how that turns out for Dave & Buster's, because it's a good reopening play. You know, if the vaccine isn't, if the variant isn't going to be as bad as people thought, then, you know, Dave & Buster's could pop. It was up 8% today, obviously on that enthusiasm that the new variant isn't as bad as thought here. Oh, I need to fix the chart. That's why it looks funny. There we go. All right. So they were in a downtrend, but they're starting to build some support here right around $30. So that's one to pay attention to. And then the last one that I'm really watching tomorrow is ChargePoint. They have earnings, CHPT. Now, the Chargers, they've been doing pretty good recently. And as a matter of fact, one of today's leaders, let's get back to the top of this chart. Oh, where'd it go? Volta, VLTA. That is also a charger like ChargePoint. While ChargePoint was down 3.8% during the day and up 1.4% in after hours, Volta was up 15.3% today. So that's interesting. But ChargePoint's got earnings tomorrow. Right now, the RSI is pointing down. They've been going down for the past week. Can earnings turn that around for them? That would be the big question. They bounced here. They've got support right around $19.50 up to $20 in that little area there. They do have support there, so it'll be interesting to see what happens here for ChargePoint tomorrow. All right. Since that was everyone's questions and I got through the stocks I wanted to talk about, that'll wrap it up for today. Thank you, everyone, for being here. I greatly appreciate it. I love the questions and the communicating. I love it. That's the best part of being live, is communicating with you. So if you are watching the replay, just leave your ticker symbol and question in the comments, and we'll go over it tomorrow. And I'll be back here tomorrow after the market closes around 5 p.m. Eastern for another market close live stream. And remember, in the description below is the Catalyst Watch video. It is the most important video I do all week. Watch it. It'll tell you about what's coming up the rest of this week. Real important data on Friday, CPI, inflation data on Friday. So that'll be big news for the market. Also, if you like my perspective, want to help support the research, analysis, technical breakdowns, and get some awesome benefits too, then click the first link in the description and become a Patreon member today. There are some awesome perks, a lot of good information, and of course, it supports the work that we do here as well. So thank you, everyone, for joining me and being here with me, and I will see you in the next video.